Hello and welcome to this webinar on making tax digital for income tax, understanding the rules and successful implementation of them. My name is Martin Bugg. I'm a partner here at Larking Gowen and I'm joined today by Matt Wymer.
Hello.
Today we're going to be discussing making tax digital for income tax, what the rules are, the requirements to join and the steps you need to take to ensure you're ready. So let's jump straight into it. Let's start with an overview of making tax digital. Matt.
Thanks, Martin. So what is Making Tax Digital? It is a government initiative designed to modernise tax processes with digital technology. It is in effect keeping digital records to ensure accurate and up-to-date tax information with the idea of improved accuracy and efficiency. So the benefits of embracing digitalisation, there's various benefits, one of them being enhanced accuracy. So digital record keeping should reduce errors and should ensure more accurate tax reporting. There is a big benefit for time efficiency, which I think is the key, whereby you can automate processes which will save you time on manual data entry. For instance, there is the ability to link your chosen bank account or bank accounts to the software, which will automatically pull through the transactions, which would save you time on either manual entry in your bookkeeping as it is, or manual entry into the software. And you can also set various rules within the software. For instance, you can set a rule to say that all Vodafone expenses should go to phone within the software. The third benefit there is real-time updates. The quarterly updates will provide a clearer picture of your tax obligations throughout the year, whereas at the moment you potentially could be getting your profit figures 12 to 18 months later than you would do when you do a quarterly submission now, which with the quarterly submissions, that will enable you to see if you're making higher profits and give you the ability for any tax planning, i.e. should you buy some new equipment or repair the assets that you've got. And ultimately, the reason why we are all going to digitalise is it ensures compliance with HMRC's requirements, thereby avoiding potential penalties. Next one is who is affected by MTD for income tax. Now, the first one you'll see is April 26, and that is based on turnover from self-employment and properties based on your 24-25 tax return. So if your turnover, your income from self-employment and property income is over 50,000 on your 24-25 tax return, you will be mandated into the new MTD regime from April 26. The next bracket is turnover from self-employment and properties of 30,000, and that's based on your 25-26 tax return. And if it is over 30,000 on that tax return, you will be mandated in from April 27, and the next bracket, it falls down to 20,000. So just to say, qualifying income is based on turnover. So that is total income in a tax year from self-employment and property before you deduct any expenses. You may not need to wait until you've completed the 24-25 tax return. You may already know, you may already be comfortably over in previous years and know that it won't change for the 24-25 tax return. So just a couple of examples. The first one there's a jointly owned property with a sibling which generates £50,000 in income. Each sibling receives an equal share of that 50,000, so the qualifying income would be 25,000. In that scenario, they wouldn't be mandated for April 26 nor April 27, but they would be mandated in from April 28 based on the 26-27 tax return. Second example, there's gross income, so income before expenses of 25,000 from rental income and 27,000 from self-employment income. In that example, the total qualifying income would be 52,000, and therefore you would be mandated in from April 26.
Thanks, Matt. Now we know who will fall into making tax digital for income tax and when their reporting obligations start. Let's consider how you, as the taxpayer, can successfully prepare for making tax digital for income tax. And we hope that's by following our 4-step plan. So step 1 is to choose the compatible software. So you or an agent you work with will need to consider the commercial software that will work best for your own circumstances. This needs to be software which can create and store digital records, and you also need to be able to submit the quarterly updates direct to HMRC. The government has also suggested those that are impacted by making tax digital for income tax will also need to use software to submit their end-of-year declarations, the equivalent of the tax return. So, if you currently submit your own returns through HMRC's website, then once you've signed up for making tax digital for income tax, we expect this will no longer be an option for you moving forward. You will either need to source your own software or to make the submission, or appoint an agent to handle the process for you. So when considering the software, this may be a full accounting system such as Xero, QuickBooks or FreeAgent, just to name 3. But it could also end up being termed what we term bridging software. This is software which may connect to your existing record keeping, which could be spreadsheets, and allow the submission of a quarterly report, providing that bridge to HMRC. So, consider if you're looking for one piece of software, make sure it can handle multiple submissions. If you have more than one source of income, such as a self-employment and property income, you may need multiple pieces of software to make the submissions that are necessary. Currently, there's only one provider that I'm aware of that has stated by April 2026 they will be able to handle a rental property submission as well as a self-employment submission. Also, consider if you have joint rental properties, whether the software can handle the submission for all applicable owners of the property. And if you have more complex ownerships, you may need further pieces of software or your own piece of software for your own rental properties and maybe joint rental properties to make submissions. More complex scenarios requires good thought and good planning to ensure that you've got the right software that can handle all the submissions. And I'd also point out that UK property and foreign property will need separate submissions as well. You should also ensure that your software is set up correctly so you can handle the accounting period that you wish to work towards. You can make a calendar quarter election that you file in line with the calendar months rather than the 5th of April, for example, to maintain your accounting records. And we'll look at the filing requirements and deadlines later. Ultimately, the software will work for most scenarios, and those with complex scenarios will need to consider in slightly more detail what their options are. Most agents should be in a position to offer the advice of how you can be compliant in your own scenarios. Let's move on to step 2, digital record keeping. So once we've chosen our software, we should consider ensuring it's set up correctly, using as much automation as possible. As Matt mentioned earlier, bank feeds are connected and the information is pulling in direct from the bank account into the software and ending up into the correct places. But if you currently maintain your records in a more manual way, either on a spreadsheet, you need to ensure that you are keeping it up to date more frequently. And if you are engaging with an accountant, for example, you will need to be able to provide that information to them if they're doing the quarterly submissions for you, at least quarterly, to allow them to meet the filing deadlines. So if you complete that spreadsheet once a year, it's now 4 times a year for you to keep it up to date. Before we can make any submissions, you will also need to sign up for Making Tax Digital for Income Tax. There is the ability to complete this yourself through the HMRC website, or your accountant or agent will be able to complete this on your behalf. If you are mandated into Making Tax Digital for Income Tax, you will be legally required to register and provide the information that is requested. The process is quick and straightforward, but do remember that once you are registered, you will need to connect all your sources of income that are applicable, such as your self-employment property or overseas property, to your Making Tax Digital account. I'd also point out that those who are digitally excluded can also apply for an exemption. So, if it's not practical for you or someone you know to use software due to age, disability, location, or another reason, you can apply for an exemption. There are 2 ways an application can be made, either writing to HMRC or by phone. But in each case, you have to answer and provide responses to a series of questions as to why you are digitally excluded. I would point out, HMRC's guidance says you cannot use cost as a reason to become digitally excluded. And you will also need to state how you currently submit your tax return. If you complete it electronically currently, then I'm not expecting anybody to be too successful in applying for an exemption. Moving to step 3. So we've registered, we've chosen the software, and over to Matt to tell you about the process of quarterly updates.
Thanks, Martin. So yes, quarterly updates. They are cumulative. So just if we look at the 3rd paragraph first, if you make an error in your first quarterly update, you do not need to go back to submit that again. You can just correct the error in your software, and then when you make the next update, that error will be submitted to HMRC. You do not need to make any accounting or tax adjustments before sending a quarterly update to HMRC. They will all be done on the final declaration that we'll get to shortly. And you need to send your quarterly updates for each self-employment and property income source to HMRC every 3 months. If you do not send your quarterly updates by the deadlines, you may get a late submission penalty. And just to recap on what Martin said before, you need to set your update periods when you sign up for Making Tax Digital. The 2 examples on the right side there, the top example is the normal calendar month quarters. So 1st of April to 30th of June, and then 1st of April to 30th of September. So that's 6 months, 1st of April to 31st December, and so on. And the update deadline is always the 7th of the month after the end of the update period. So for the first period, 1st of April to 30th of June, the update deadline is 7th of August. And as you'll see, the second one is 7th of November, and so on. The second example on the right there is if you choose the update quarters to be in line with the tax year. So that's 6th of April to 5th of July, with the final one going 6th of April to the 5th of April. And again, the update deadlines are exactly the same. So they're always the 7th of the month after the update period. So step 4 is the final declaration. This is where you complete and submit your tax return. You will have to use the MTD software, and the filing deadline is the same as the tax return deadline as it is, i.e. 31st of January following the end of the relevant tax year. So for example, you can submit your tax return for the 25 to 26 tax year anytime after the 6th of April 26, but you must submit it by 31st of January 27. If you do happen to miss the deadline for submission, then you will be liable to a late submission penalty point. But obviously, we're not here to discuss that. It is more about complying with the new regime. And just to say, this is, as Martin said, the new tax return as it stands. So as you submitted before, that will probably be redundant, and the final declaration will be how you submit everything from then on once you're in the MTD regime. Thanks, Martin.
So how can we help at Larking Gowen? We have an experienced team who understand the rules for making tax digital for income tax and can advise when individuals fall into the requirements. We can provide software recommendations for helping you get the right software for your needs. And following that, we can also give training and support on the software to assist with your record keeping. If you need help with registering for making tax digital for income tax, we can assist with the process together with offering final declaration assistance as well. So for those that may have done their tax returns in the past themselves, but now need a piece of software or assistance doing their final declaration, we can provide that part of the solution to you. As always, do reach out to either Matt or myself if you'd like to know more about how we can help you. But let's run through, just to recap, our top 5 tips for getting ready for making tax digital for income tax.
So tip number 1, know when MTD applies to you. We've been through this on a previous slide, but £50,000 and above, and that is self-employment income and rental property income based on your 24-25 tax return. If you're over that amount, then you will be in the regime from April 26, and then 30,000 for property and self-employment income based on your 25-26 tax return. If that's over 30,000, then you're in from April 27, and it drops down to 20,000 on your 26-27 tax return, which means you're mandated into MTD from April 28.
Top tip number 2, make sure you pick the right software that suits your needs and your circumstances. And hand in hand with that, going top tip number 3, to make sure that you keep your bookkeeping up to date. If you need help or assistance understanding which software is right, there are free software out there, free for a reason, and there's paid software out there that you can use that has much more functionality in them. If you need help or guidance, then do please reach out.
And top tip number 4, make your submissions on time. As previously mentioned, you will get late penalty or late submission penalty points if you don't. If you get up to 4 penalty points, then there may be a financial penalty. And top tip number 5 is get your support early. Don't ignore this change. It isn't going away. If you are mandated in from April 26, if you've already done your 24-25 tax return and you know your income from self-employment and rental properties is over 50, you really need to start looking at this now. It is a big change. You will need to familiarize yourself with the software, how many submissions you need to do, what software licenses you need. So yeah, please don't ignore it, and please do reach out. Martin and I are very happy to discuss anything with you.
So finally, a reminder. You will need to use Making Tax Digital for income tax from the 6th of April 2026 if you have qualifying income in the 24-25 tax year of more than 50,000. HMRC will write to you around February-March 2026 to tell you, based on your tax return that has just been filed, you are required to use Making Tax Digital for income tax. You must have Making Tax Digital compatible software. You must have the means to make the quarterly submissions. HMRC have compatible products and the latest software products listed on their software choices page on their website, where you can choose your own personal scenarios, and it gives you a list of all current software that can handle your needs. But do reach out to any of our team to help with your software solution. You will need to do your quarterly updates and your final declaration, the equivalent of the end of year tax return process. You must sign up and register if you meet the criteria. And think about where your accounting period aligns to. Does it align to the tax year or to the calendar quarters? You will need to understand this because you select this in the software before your first quarterly update, and once it's selected, it cannot be changed. So do reach out to me and Matt. Here are our contact details, and we will endeavour to assist you. So all that remains is for me to thank you for joining us.
Thank
And
you.
have a good day.